I'm not exactly sure why I like to see a nice setup on the cryptos, but they're definitely my favorites. Hi, this is Tim from TradingStrategyGuides.com. I'm going to show you a really nice trading range on Ripple. And a few of our setups have triggered yesterday, so we'll talk about them. And another dip into the archives for our trading maxim of the day. Remember, you can speed this video up by clicking the gear icon in the lower right of the video and selecting a new speed. Let's have a look at our open trades. My re-entry into Cavco Industries right here at 176. Hit the first target yesterday right here. Then it dropped and just barely took out my break-even stop just by a few cents. This, of course, would have wiped out my stop in any case, so I was commiserating a little bit about being taken out by a few cents here, but this push down kind of alleviated that anxiety. No, I wasn't really anxious about it. I was done with it, but you know, this is really wicky up here. And, wicks represent price rejection, so this upside might be done. However, this thing that just happened the last few minutes and then closing back up here might suggest that there could be some more upside on this. In any case, for right now, I'm done with it. $841 profit on this trade, and we'll watch it for something else to happen. The E-mini S&P 500 closed below the range yesterday, right here. I sold it around 29.5175. Lots of volume on this, you see that. So I took a full-size position. First target is 29.2075, which hit just a few minutes ago. So moving the stop up on this to break even right now, and we'll see how that goes. Urban Outfitters closed below the range yesterday on better than average volume, slightly better anyway. So I'm short around 22.01. First target is 21.21. Stop loss is 23.21. I can't believe I didn't put these on the chart. And RNO, which was the last of the signals from the special webinar, finally triggered. And I mentioned Wednesday's webinar that I was short 50.86. And the first target was hit today on this gap down. So I took half the trade off here at 49.37. Moved stop to break even on the second half. So that's $847 profit so far on RNO, with our second half still running. RYAAY opened below the triangle today, so keep an eye on this thing. We may be shorting this near the end of the day. I look at these things 15 minutes before the market closes to see if they're going to trigger, and that's about when I enter these trades. The EURCAD kind of gave me sad eyes. Not really, but it sounded good to say that. I shorted this thing at 146.10 on Wednesday's close. Big volume on this, but then it just turned and went against me. So it closed back into the triangle, and like I told you, we don't wait for these things to hit the stop. We get out of them if they get back into the consolidation, because the whole point of this is momentum. If we don't get enough momentum to hit the target and it goes back into the consolidation, then we want to be out of it early. So I closed this one at 146.38. So that was a $708 loss on our account for this whole trade. Now I'm going to show you guys how I track these trades, because these are not the only trades I take in my personal account. So I track the trades that I put on these YouTube videos using this spreadsheet right here. And I think I've showed you this before. This is all the video trades that I've done since the end of April, and I made this a fictitious $100,000 account to start out because I'm sorry, I'm not going to show you my real accounts. This is a functional spreadsheet, so forgive me for not taking the time to make it pretty. In any case, the green lines are trades that hit our first target or better. Pink are trades that were shut down for less than the full 2% or 1% risk, depending on the position size. The darker pink trades are those that hit the full stop for a full 2% or 1% risk. And of course, the 2% or 1% has to do with the position size here. You know that under certain volume situations, I will only go half size, so I put that half or full size over here. The yellow trades are the ones that are currently open and that have hit the first target. The S&P 500 hit the first target earlier this morning. I haven't had a chance to fill out the profit here. And white are the trades that are open but have not hit a target yet. So you can see here's the EURCAD loss, 707.87. Here's the 848 that we just made on RNO. CVCO, the 841.97 we made on CVCO, and so on. So our current running total since around the 1st of May is $27,000, almost $28,000 profit. So this spreadsheet does the calculations based on how I manage the trades, and it assumes a 2% risk on a full-size position, and then of course it multiplies the position size to get the actual loss. So you see here was a full-size position loss, $2,400, which was roughly 2% of the total when we opened this trade. Okay, let's talk about Ripple and this great trading range. This is a really nice trading range on Ripple. It's hit it, both sides of it, several times. So it's been around for several months and several touches of each side. And you can tell the traders are getting bored with the consolidation because you see the drop in volume here, the drop in volatility here. In addition, there's this really nice continuation triangle. Now, I considered whether I should trade a break of the continuation triangle, but what I really think is that this 28.44 level down here is fairly strong, and it could stop a break of this triangle. However, a break of this triangle could provide the momentum necessary to break this level. So I like it, but I'm not going to trade this pattern. I'm still trading the range pattern. But you can see the volatility has dropped off even since this triangle has formed. The setup is simple. We will buy a daily close above this 47.74 level, or we'll sell a daily close below this 28.44 level. We want to see at least average volume on the breaking candle. So when this breaks the range in either direction, I expect it to break below, but in either direction, you look at this volume bar, and this volume bar has to at least reach this average right here. Now, if you've got at least 75% of the average volume, you can open a half-size position to reduce risk. You can calculate 75% of the average volume by taking this number, which is the current volume, and dividing it by this number, which is the average volume. You should get at least 0.75. I'm getting better at that. If you don't get 0.75, then don't enter the trade. The stop loss will be 1.5 times the ATR, average true range. On the breaking candle, you'll look for the average true range right here. You'll multiply that by 1.5 to find out what your stop loss is going to be. The first target will be 1 times the ATR. If after entering the trade we get a candle that closes back inside the range, we will take the loss right then and not wait for it to hit the stop loss. Remember what I said earlier about shutting down trades early if they aren't working as intended. Our intention is that a breakout from these patterns will be explosive and hit our target fairly quickly. If the momentum goes away, we want to shut the trade down without taking a full stop if possible. When our price hits our first target, we will close half the position for profit and set the stop loss to break even on the remainder. We will then follow stops as price moves in our direction until the market takes us out. Okay, real talk here now. I ain't your mama. I just love saying that. But You know, it's the truth. I'm not trying to tell you what to do. You do you. And I'm not saying that sarcastically either. It's important that you know what your gifts and limitations are as a trader and work with those gifts and limitations. That, I believe, is the most important thing you can learn about trading, the whole psychology part of it. I'm just telling you how I handle these trades. If you want more details about that, look below this video for a link to my trade management video that explains it all. Also, if you need help with the whole psychology part of the trading, then I recommend you go to Amazon and buy a book called Trading in the Zone by Mark Douglas. It's the single best book I've read to benefit my trading. I reread it a couple times a year. It's not going to give you any trading strategies or indicators or any of that. It's going to help you with trading psychology. That's what it takes to be a good trader. All that other stuff is secondary. I'll put an Amazon link below the video. And speaking of psychology, let's have a look at today's trading maxim. A maxim is a general truth, fundamental principle, or rule of conduct, or sometimes just a proverbial saying. My maxims come from various sources, including my reading, the internet, or suggestions from friends, coaches, teachers, or other acquaintances. The purpose of my maxim is to motivate me to discipline. I suggest you start your own list of maxims to help you in your trading. Things that you can say to yourself while you're trading to make sure you always do the right thing. Feel free to borrow from my list. And today, we're digging into the archives. I always say that my maxims are in no particular order, but today we're looking at number 1. And yes, it is number 1 for a reason. This maxim has helped me stay out of trouble more times than I can count. Tim's trading maxim number 1. Would you rather be in a trade wishing you were out or out of a trade wishing you were in? Anyone who's traded for more than a minute has been in a trade and was regretting every minute of it. In fact, I've been in trades where I was regretting every hour or even every day of it. Say this to yourself when you're about to enter a trade. Use it as a reminder to be sure you have all your rules in place before you enter the trade, so that whatever happens, you've already got a rule to decide how to handle it, and you don't have to make snap decisions in the middle of battle. This has kept me out of more bad trades than any of my other maxims. And remember our trade plan here. We're looking for a daily close above the range to buy, or a daily close below the range to sell Ripple. If the volume is not quite average, go half size as long as it's at least 75% of the average. Your stop loss is 1.5 times the ATR, and your first target is 1 times the ATR. And remember to check out the trade management video for more details. The link will be below. If you don't have time to analyze the charts, or maybe even if you don't want to, I think you're going to like this. Trading Strategy Guides has the Strike Trader Elite and the EFC trade signal services. You'll get Forex trade signals on a dozen or so pairs on several different time frames, all based on the Strike Trader Elite and the EFC system. Look below the video for a link to the free signals on the Telegram application. I'll post a link to my video that explains the Strike Trader Elite system. Be sure to come back to Trading Strategy Guides YouTube channel every week on Monday and Friday for my analysis videos, and Wednesday morning for my training webinar. And check out the blog for great trading strategies. I'll put the link below. Also follow me on Twitter. If things happen between my videos, I'll post them there. I'll put my Twitter link below. Tell your friends about us and help us make this the best trading channel on the internet. As always, thanks for watching. Thanks for subscribing. And don't forget to hit the thumbs up below. Have a great weekend, and I'll see you next time.